And now, believe it or not, we are at the point of the final panel of the day on the state of digital currency and blockchain. The moderator is Rick Willard, old friend of the DFSO at Columbia. He's founder and managing director of the Agentic group. Rick, of course, is a well-known digital asset and blockchain pioneer, and he's based in New York City. Over to you, Rick, and your all-star panel.
Unmuting is good. Thanks, Leon. Nice to see everyone. It's very well attended. It's amazing to see how Leon, that is, manages to pull people out of whatever they're doing for these events. This is my, I think, third or fourth one. And I really appreciate the chance to get to talk to people that I haven't seen in a while, like Nisa and Sandra, and meet new friends as well. So let's get into this, this COVID thing and blockchains. I want to stay with the theme of this if we possibly can. But first, let me just introduce the gang here. There's Sandra Rowe. Sandra is the CEO of the Global Blockchain Business Council, one of the preeminent let's call it governance body, right, Sandra? Policy body for modern blockchain deployment, where that happens. David Birch of Consult Hyperion, Brett King of Moven here in New York City as well, Aaron Wright from Cardozo Law School, and Nisa Amoils, my buddy, the venture capitalist, and we've had lots of conversations about what we're going to talk about today. So it should be a pretty interesting conversation. And again, I want to stick back to COVID and what's happening here. And people are talking about a phase shift, clearly based on economic stress, social stress and upheaval, health concerns. We're going through governance concerns. We're, depending on where you are in the spectrum with that. We're having a scorched earth moment, and in that is opportunity. We look at the nature of money, and I hear these constant threads and conversations that touch on the nature of money and value itself, which is one of the better things that Bitcoin and blockchain have introduced to our conversations about how we move forward. The very thought of money ultimately informs our values. It informs the kind of people that we are, and what the nature of greed or benevolence might be in any given circumstance. So this talk about the incumbent banking system and the incumbent financial systems really have to be looked at more deeply in our relationships with them, and the values that they instill in society itself. So my last thing on that is that, money, as we currently understand it, is essentially a zero-sum game. For me to have more, you have to have less. And I think that needs to be questioned as we move forward. And I'm going to be questioning our panelists today about things like that. And I'm going to start with Sandra. After a decade of all this stuff, this digital value, Sandra, that we've been promoting, buying, trying to kick upstairs, and all the things that we do and all the wonderful things that you do, we still don't have actual scale and mass adoption. And that's just yet to be here for digital currencies. So what do you think are the conditions for this to happen, and if ever? And are central bank digital currencies the actual answer, or is that just more of the same, simply digitized? Can't hear you.
There goes a rookie mistake. Do these enough. You should know how to do this by now. Anyway, hi, Rick, and thanks to everyone out there who is dialed in, logged in. Appreciate the time. Look, I think we're on that journey. I think we were going up a very steep slope, established institutions, established way of doing things. That mentality is really difficult to shift if it's kind of working, right? I mean, let's face it, capital markets today function. $6 trillion goes through the FX markets every single day. Now, there are definitely problems with fiat currencies, and it's not necessarily accessible to everyone in an easy, frictionless way. However, it does kind of work. So if you're sitting in the established camp, it's actually quite difficult to rip out the pipes and put new ones in, even if they are better. So it's going to take a while. So that's one. Patience is required. Number two, I think with the pandemic, it has accelerated the conversation. It's accelerated the need I really wish we had some token, whether it's a CBDC or a stable coin that was prolific out there. I really wish everyone already had a digital wallet, but we don't. And so therefore, we're going to need to have people build that, and quickly, but responsibly. And I think that's the challenge, is how do you go fast in an environment where you also need to keep financial stability and grow things responsibly.
Okay, thanks for that, Sandra. Who else wants to chime in on that? I think more than likely, I know Nisa has something to say about it. The other two gentlemen we haven't met before, but happy to hear your thoughts as well.
On the currency, you mean?
Yeah.
Yeah.
Yes. What are the conditions for adoption for digital currencies, and is that a reality anytime soon?
Look, I think the relationship with COVID is that, which I'm not an expert on, but the relationship with COVID is that COVID has it's kind of accelerated the transition. It hasn't like changed the direct. It's like pushed us downhill, but we were going in that direction anyway. So we're going over to digital currency one way or another. And the reason why I think there's a thing economists call, I hope there's no actual economists on the call, I don't want to get called out on this, but there's a thing that economists call the big problem of small change. And the big problem of small change is this: if you want to replace the circulating medium of exchange by competitive private issue, then the marginal cost gets driven down to the marginal cost of production. And nobody can make a living out of doing this. So you end up with the state having to step in and provide it. So they may as well do it, right? So it kind of makes sense to have a digital dollar, or, I mean, I'm not saying anything about blockchain. I mean, maybe it's good to do it. Maybe, most of the blockchain things I see are pretty stupid. So I couldn't say whether that's the right way to, but the point is that having a digital dollar is a good thing, right? So then the next question is, if you're going to have a digital dollar, will that be the only money that people will use? And this is probably where my crackpot theories are a little divergent from Brett's, mainstream and conservative views, because I kind of think conservative. I was waiting, because I kind of think, like, if you imagine, just as a sort of generalized picture of where we're going, if you imagine that we have a generalized infrastructure for trading digital assets of one form or another, and if you assume that central bank digital currency is one particular special case, it's just an asset, it's just a special case because it's backed by, and it's wrong to say it's zero sum. I mean, I know you've been around to the US Treasury recently, they're printing the stuff like there's no tomorrow. There's no zero sum there, by the way, Rick. That's got its
own set of issues that will come back to haunt us, but please go on, yeah.
So the idea that, within a generalized future where people are exchanging digital assets, and it's important to distinguish that because in money-like behavior, in other words, without clearing and settlement, in that kind of world where people are exchanging those digital assets, central bank digital currency will be one of those assets. Mm-hmm. But I would be really surprised, in fact, I wrote a book about this, I'd be really surprised, it's called the Before Babylon Beyond Bitcoin, by the way, it's available in all good
wherever good books
it's a solid
all of the terrible ones as well, I hope. But the point is, there's good reasons for thinking if you create that platform so that essentially anybody can create money onto those platforms, it's not obvious that everybody will, right? But who could? And there are some interesting possibilities. I mean, if I wanted to inflame the discussion, I might say, for example, it's not completely obvious to me why New York uses the US dollar, given that the economy of New York is almost entirely unrelated to the economy of large parts of the US. You might have, maybe there'll be a global Islamic currency that everybody wants to use. There's 1 billion people using that. Maybe we'll all just get fed up with using the dollar because of all the stupid rules and things, and we'll just use Chinese digital currency instead. So saying that I firmly believe there will be a digital dollar, there will be a central bank digital currency, but that's not the same as saying that will be the only currency and that's what everybody will use.
David, that's an amazing point. I'm going to circle back to that later. I actually have that on a list of things to talk about. Brett, I'd like to hear these conservative viewers.
Well, no, I think the real question is around value exchange, because currencies have, they're relying on confidence, that people are confident or that there's a common value exchange element, that that people see value in that. Like as Dave has said, frequently, you think the US dollar is, you think paper money is real. It's no different than cryptocurrencies if the value exchange exists. So then what's happening right now as a result of COVID and other geopolitical changes is that the US dollar is weakening. And so there is an opportunity for new value exchange systems to come into place. In fact, I think it was Dave that tweeted out this Nikkei article that China and Russia have sort of entered this financial alliance recently, and the share of a US dollar trade has fallen below 50% for both of those nations for the first time. And so that's a big geopolitical shift that we're not hearing a lot of news about right now. But if you think about why money was created, it was created to enable commerce, and it was created to enable commerce. The US dollar was created to enable commerce within the US geographical boundaries, and it extended beyond that. So, but there's not much that's going to take to tip that over if a better value exchange mechanism comes into place. But like Dave, I think I'm of the view that we probably get more rather than less in the short term as we experiment with alternative value exchange mechanisms. And that includes, CBDCs and also, other forms of tokens. But where it gets really interesting and where we will see, I think, more permanent change around this is when we start getting AIs involved in that process. And AIs, by the nature of how they'll do value exchange, we may end up with things like virtual bartering systems and things like that, which are more efficient for machines to do, machine to machine than, a US dollar, or fiat currencies per se, even if they're, whether they're digital or whether they're fiat. And so I think that's when things really change. So I think we're starting to see the finish or the end of the US dollar hegemony, but I don't think we're right yet, ready to have a completely, digital system. But when AIs come into play, I think that's when it becomes digital.
So you guys took this further faster than I had planned to go. So I'm going to roll with where you're going, because it's really important I believe in community currencies. Before the Civil War, America had 10,000 active currencies, over 10,000 active currencies. And that was the human condition more than not around the world. Local currencies, regional currencies, bank currencies, grocery store chits, all kinds of different value exchange mechanisms. So what the unique issue that we have here is jurisdictional as well as technological. So Professor Wright and Aaron, we don't know each other, but hi, nice to meet you. I'm going to throw that one to you, and Nisa, I haven't forgotten you. But what do we have to look at from a jurisdictional regulatory standpoint to try to galvanize and standardize these particular value tokens, let's call them, both CBDCs and let's say blockchain-based digital assets and other kinds of tokens that are now representing different forms of value? And I'll just give you two examples that are active right now. One is the state of Orania in South Africa, which is a white separatist group that decided they're going to have land in South Africa. They're going to basically mint their own digital currency and peg it one-to-one to the South African rand. They can do what they want to do. That's not the point. The point is, what they are and what they represent is not my issue. The issue is that they are then, by sale of the token itself, actually people who are of that mind are supporting that particular community and those ideas more than anything else. So the value of ideas becomes important as well. And the same thing can be said for Akon, the rapper in Akon City in Senegal. So he's building out a community, an entire city based on the Akon digital currency. So you see these true examples popping up. Now they're going to be, when it comes to trading, AI notwithstanding, Brett's very right about that, but legal convictions are going to be upon us at this point. Now, we're already having a hard enough time with that. What do you see happening?
Yeah, I mean, I think that those are great questions. I'm also of the belief that there will be more than one asset. And I think, case in point, we're seeing, particularly in the blockchain ecosystem, kind of the experimentation heading in that direction, right? Where there's not just even one stable coin that's pegged to, let's say, the US dollar or some other form of value. There's an entire ecosystem that's emerging around that. And at the same time, we're not only just seeing community tokens, we're seeing things like personal tokens or other representations of value. that I think are blurring the lines even from where we may have been several hundred years ago here in the US. And I think part of what is needed to kind of see and build this world is to let the experimentation that's happening on blockchain technology. And yes, I think David's right. Some of it may seem silly, may seem toy-like, may have lots of problems with it. But I think that that is a fertile ground for experimentation to get to that point in time. And I think we've seen, particularly with conversations about even digital dollars or other forms of digitized fiat currencies, they're in large part, at least in part, animated by the activity that's happening in the blockchain ecosystem. But when you begin to think about abstracted forms of value, it obviously raises a number of regulatory issues, issues that transcend jurisdictions, much like what we saw when we built a global, although it's fracturing, communication system called the internet, right? It raised lots of tricky problems when it came to certain pockets of the law, most notably in the 90s, e-commerce laws, and also IP protection laws. I think now that we're moving into an area that's highly regulated, i.e., fiat currencies or derivatives or other forms of derived value off of some other base, you're going to run into a whole host of issues when it comes to securities laws, commodities laws, and also questions related to AML, know your customer compliance. Because I think
that's just here. But and I think the tricky part, particularly if this ecosystem, and this is what many people are betting on, that the blockchain ecosystem continues to grow at these hyperbolic rates, as it seems to continue to do, that this may actually be the ecosystem and the framework that we need to think about regulating. And what makes that tricky, particularly in the context of blockchain technology or next generation blockchains like Ethereum, is that many of these systems are fairly autonomous in nature. Not completely autonomous, but once they're released, it's kind of hard to put the cat back in the bag or the genie back in the bottle. And that makes it challenging as well. So you have this system where
the Bitcoin back in the wallet.
Yeah, put the Bitcoin back in. But you have a system where it exists everywhere and nowhere at the same time. You have rules related to that system that are hard to change once they're deployed. It's possible to change them, but it's more difficult. And you have the raft of financial related regulatory concerns that I think we've been grappling with in lots of different areas. And I think that is a challenge, but I think the headline is we should let these experiments continue to grow. I think we're learning a lot about what the future digital world may look like. And I think we want to make sure that it doesn't go off the rails like we saw a little bit like what happened in 2016, 17, and early 2018 with the token boom, ICO boom, where it went a little bit off the rails. But I think that there's a lot of growth here and a lot of really interesting things that we're going to see in the next couple of years.
Thank you for that. Well said. Nisa, from a venture capitalist standpoint, let's talk about the cult of scale, okay? And let's talk about things that you and I have talked about over the few years that we've known each other and how we both sort of roll in the world. It produces a certain worldview, right? Scale itself produces a certain worldview. And we talk about the first question to Sandra was about, how about mass adoption? Somebody's got to fund these. Let's say there are individual currencies that represent different forms of value, both individual, community, or whatever, retail, whatever value is extruded from that process. How is venture capital now looking at this space? I very early in this game used to actually, David, to your point, I did one of the first research papers on Sharia compliant digital currencies in 2012. So it was something that this whole community thing became very close to me right away. Can we bake in, from the VC's perspective, ways that money works more beneficially? This whole trustless movement or trust movement that's inherent in our conversation, people don't seem to be able to do that well. But algorithmically, we want to be able to do that to enforce trust, to enforce inclusion and things like that. So as you look at some of these projects, are you yourself active in looking for those kinds of properties within your investments in the digital currency space?
Absolutely. So I think that a lot of good points were made about various ways that we could achieve mass adoption. Some of the ones that haven't been talked about yet are for instance, gaming. And if you look at people who've been natively playing games, they are used to transacting in digital currencies of whatever form the token is. And so this is a natural progression for them. And I think you will see a lot more mass adoption of tokens happening with the rise of people staying home and playing more games, as well as realizing that they can eliminate platform risk amongst the game owners, as well as monetizing and owning their assets that they purchase in the game to be able to use on other platforms. So that's one thing. Another is apps like Fold and Lolly, who are making it worth your time and incentivizing you to participate in getting rewards for using cryptocurrencies. I think we'll start to see a lot more adoption happening there as shopping trends transition more online as retail stores continue to close. And then if you look at Cash App, which is owned by Twitter or Jack Dorsey, you look at how much mass adoption is happening there just from people using Cash App on their phones for Bitcoin. So while I don't think we will end up with 1,300 altcoins, I do think that there will be some combination of central bank digital currencies, leading cryptocurrencies, and maybe cash if people don't completely want to do away with it because of transmission of diseases. But one thing that hasn't been mentioned yet is how far along China is with the digital yuan and the DCEP. And a lot of what is happening there is politically motivated. A lot of what you mentioned that is happening in Africa is need-based and the need for innovation. And a lot of what is being, what you pointed out is community-driven. And I think that's the key difference with looking at traditional venture capital versus this sector. Even in looking at what's happening in decentralized finance right now and the rise of governance tokens, you see a lot more experimentation of incentives, and it might be a small group of people trading right now, and it might be unregulated right now, but in the long run, regulation will catch up, and we will see some benefits coming out of what's happening right now in terms of you can not be a passive investor anymore. You can be an active participant. And that in and of itself fulfills the discussion, I think it was the last panel, about democratization of access to capital and finance. And so I think that is where the execution meets the dream, so to speak.
Nice. Okay, it's a great answer. I mean, if you look at the landscape right now, obviously, crypto writ large is controlled mostly by young males. So inclusion, all over the world. So inclusion itself becomes an issue, and so communities do need and do have the inherent value that they can extrude out and create something that's a tradable asset. But what is then this thing that this phenomenon that we see? To take your thought a bit further, what you're suggesting, this is the phenomenon I'm getting from you, what you're suggesting is a corporate currency. When you look at loyalty and rewards, you're actually looking at more of a corporatist application. I happen to believe in that. I actually think that that's going to be trillions of dollars worth of value at the end of the day, because consumerism is changing. Just look what happened with COVID and with Amazon and other, we're going online more. Our digital existence is much more heightened at this point and much more accelerated. So now that we have this, we're going to see more incentivization to participate in an economy. And this goes to the future of work. This goes to universal basic income. All kinds of different things are affected by something like this. But the nature of corporatist currencies is also a concerning one.
So
Right.
yeah, I mean, I think that's a great analogy, the corporate currencies, but I would frame it a little bit different. I think particularly what we're seeing in the blockchain ecosystem is actually not corporatist in nature. It's eschewing those corporatist roots so that you can have an open source, decentralized protocol that's managed by its community. So to give an analogy, we're seeing certain protocols emerge that perform roughly some sort of market function. Maybe that's serving as like a money market in some sort of way, or some other type of financial primitive that we see in more advanced markets. And instead of it being owned by a corporation, which would make it inherently corporatist in nature, it's owned by its community, or that's the goal of what folks want to provide. And that doesn't necessarily solve some of the distribution questions that you rightfully are worried about, and I think many of us are. But it does, give people an opportunity on equal footing to have a voice. And if these protocols do continue to scale, right, so we fast forward 5, 10, 15, 20 years, and this hypothesis that blockchains continue to grow is right, well, that means that for this very important piece of financial infrastructure, it's going to be community managed and governed, right? And not just managed by regulators, potentially, but also by the people that are using the platform, that are participating on the platform, et cetera. And that feels to me like a pretty healthy vision of the future. If we all, as an example, had a say in how Wall Street operated, not just regulators, but the actual people, maybe we would, and I use Wall Street in a very broad context, maybe that would lead to a healthier financial system, a more inclusive one, and solve some of those issues off the bat, and also be a little bit more agile in terms of responding to issues, et cetera. So I think it's something new here. I don't think this is just opening up securities and corporations. I think it's really monetizing and creating avenues for people to support open source technology that's community driven. And that's a big deal and a big shift. And I think that's why it's so confusing to many folks when they look at blockchain technology, because they're assuming at its base that there's going to be some centralized corporate entity that's sitting behind there, when in fact the technologists are looking to not do that. Bitcoin was a great example. Ethereum was another example. These were not corporate structures, right? They were trying to avoid that corporate structure. And even in the US, for elite projects like Compound, which were backed by elite US venture capitalists and other folks, they're moving away from that corporate structure because they know in the long run that it gives their protocol and the tools that they're building the best chance for success.
Yeah, no, that's a really good point. It's a strong point. I was speaking more in terms of loyalty and rewards points, which have precedent in loyalty points that we already know. Because the hardest thing for people to change is their behavior. I think someone pointed that out earlier. And my mom still has, number one, a VCR. Number two, it's still flashing 12, and it's been there for 25 years. All right, so and she still doesn't know how to operate. I had to go over to her place and can't believe I have to put a VHS in. So it's that kind of behavior and self-governance by the mass of people is a really tall order. So I think you're going to see centralized applications like loyalty and rewards fulfill that slot of value. But I mean, Sandra, how do you go about retraining the human mind to think of value in these different terms and to participate in that value creation?
Thanks, Rick. And I, appreciate all the views that have been expressed so far. I think we have half steps that we have to go into to scale, at least from a mass adoption standpoint. I'm going to give an example that happened during COVID. And this is a real life example. You guys can look it up. There's a project called Viral Cure by a group called Storm in Brazil. And they had already been working on healthcare related solutions using blockchain with the largest Brazilian public hospital in Latin America, actually. It's the largest public hospital out there. Highly regulated. And when COVID hit, they wanted to help. What could they do? Well, they wanted to build a way for people to support and help that hospital, but they were hemmed in by regulations and various legal contracts, et cetera, et cetera. So what did they do? They crowdfunded nearly $5 million from the community. And that was the first step in. They knew they wouldn't be able to add crypto. It wasn't viable from a first step in. So they raised just shy of 5 million thus far. They've put in a governance structure which will allow for people to basically handle and vote where things go, where their money goes. And they're overlaying eventually a tokenization feature into that. It will be completely open source. It is then for people to take that model and put it into their own communities. And that sort of first step in is sometimes what you have to do in order to work with government and or highly regulated entities. It's not the only path, but it's a path that this group decided to take. So I highly recommend people take a look at Viral Cure, the project, and Storm, the organization that put it together in Brazil.
I'm going to check it out right after this.
Hey, can I jump in?
Sure,
For a
please.
second, Rick. I think we have to be careful of framing this with the US experience. If you look at what's happening outside of the US, particularly with the super apps, they could be excellent platforms for creating, loyalty programs that turn into real currencies that are tradable for, suppliers, merchants, and consumers on those super app platforms. That's one difference that we see emerging out of, say, the WeChat super app or Gojek in Indonesia and these sort of things, where you see this community basis within that ecosystem. Ecosystems are very powerful at generating community participation for things like the use of these alt currencies, and that could be led far more efficiently by, commercial ecosystems. One of the reasons Alipay, and WeChat Pay are so dominantly successful from a mobile payments infrastructure perspective is they had those huge ecosystems. In the US, we've got regulatory constraints around Amazon, creating their own wallet and own cryptocurrency, for example, but China didn't have those constraints. And so I think we have to be careful about sort of framing it with the sort of way consumers respond in the US. And that leads me to the conclusion that, the growth may be in places like Asia and Africa for this type of alternative approach to currencies rather than here out of the US.
Mm-hmm. Yeah, I would actually agree with that as well. So David, in a world where data is value and time becomes digital as well, what is currency? What's the nature of currency at this point? I think you're well equipped to answer a question like this. I mean, does it remain the domain of sovereigns? What's happening macro versus micro in that?
What's the nature of money?
Yeah, I mean, Georg,
yes, we can deal with that quickly and then move on to important things. How can I frame that answer? I'll go back to what Nisa was saying about games. I think she made a really important point. I just want to reflect back on it. So, first of all, and then I'm going to say why Aaron was wrong about everything he said, but I just want to talk about Nisa first. So you'll watch Ozark. It's like my totally favorite television show ever. It's like the best show on television by a mile.
Isn't that money laundering training program?
Yeah. So in series 3, episode 1, there's the mom and the teenage boy at the breakfast table. And she's trying to persuade him to get her son. And she says to him, he's playing Warcraft or something. And she says, mining virtual gold isn't a real job. And he says, all money's imaginary, right? And I feel like that little vignette from Ozark is like everything we need to know about money. But Nisa's point's right. I mean, my kids played Warcraft. They learned everything they know about economics from playing World of Warcraft. They didn't learn any of this stuff at school. Warcraft was where they learned to, about information asymmetries and how you could spot the new kids and get their stuff off them because they didn't know the value of anything. How you could get corners in certain valuable objects and extort. How you could rig the market through backhand trading, and it's like having a little investment bankers in the house. So she's absolutely 100% right about that. I hadn't thought, but I think she's right as well. I hadn't thought about how that relates with COVID and more people playing games at home, but not Fortnite, right? Because that got banned by Apple. They said that was a bad thing. So I agree with those kind of things. But and also, by the way, I can't help make fun because you're all Americans, but China has a digital bank, a digital currency, right? You guys were talking about the digital one. China has a central bank digital currency, and the US has a coin task force. And I hope you've all been kind of following, because the coin task, I'm reading it today, I'm not making this up. You have a coin task force, and the coin task force, which, by the way, the US Mint loses 99 cents on every penny it makes. They lose 99 cents and they're making pennies. I would get out of that business. So there's some priority stuff going on here. The Chinese have a digital currency. You have a coin task force. I'd suggest there's like a mismatch here. But the reason why Aaron is wrong about some of these things is that the decentralization sounds fun and appealing if you're, a 20-year-old MIT computer science undergraduate, There are, I don't know the exact number. Like if I was talking in the UK, I would say it is a real statistic. In the UK, a quarter of people think that Sherlock Holmes was a real person. That's funny, mildly harmless. In America, a quarter of the people think that Hillary Clinton is a shape-shifting extraterrestrial lizard, and they drink hand sanitizer. Yeah. So why they should have any say in how the financial system should be organized, I just haven't the slightest idea. I don't want this democracy. This is insane. Why would you let people I don't get that at all, Aaron. I mean, this is hippie stuff. I don't understand you. Why would you do that? And also, the idea that you would do this on this decentralized blockchain, every single week, without fail, every single week, I read about, somebody typed in the code wrong. There's an error in the smart contract. Everybody lost all of their money. I don't want, if something goes wrong, I want to pick up the phone and call somebody and have it fixed. I don't want, you pressed the wrong button. You sent all your grandma's money to Vladivostok and you can't get it back. Hard luck. Caveat emptor. I don't buy any of this stuff.
Well, that goes to my point, David, that people don't necessarily, not everyone wants to participate in a democracy, especially about value and finance.
There's plenty of people I don't want to participate in a democracy.
Yeah, and I think that that's completely fine. And I think we've described a world where there probably will be a place for centrally controlled stores of value with, wise experts at the hand steering the ship. And maybe that proves superior. But at the same time, we've also seen an effort to not have it that way. People do want a say. It's part of a much broader view of where the economy is going. And I have a sense, David, that the gamers that Nisa was talking about, or the folks that are participating in the metaverse, to use the term that was described in the last panel, they are not going to pick up a phone to call anybody. They don't care about phones. They don't live in a world where there is phones. They live in a digital world where they've learned lots of these basic Econ 101 type mechanics, and they want to play around and experiment with it. And I think we've seen that these open emergent systems are interesting. They drive innovation. And that's where the real value is. And as an American, I am concerned that the U.S. is not taking the lead when it comes to digital assets, both for political reasons, both because of a concern about how controlling a digital currency can lead to the oppression of rights, which is deeply concerning, particularly if there's not privacy baked into that. But at the same time, I think that I'm encouraged that we're beginning to make progress here. And we're thinking about how to do it in the right way. And maybe that is a more community-based approach. And I think that is something that's definitely worth exploring, and something that, putting aside the issues that blockchain technology has, which I'm sure you could have leveled those same criticisms against 1950s computers and 1960s computers and 1970s computers. Yeah, but I don't know if that's the case too, that blockchain technology won't catch on. I think when you see big movers like Facebook, which have incredible experience in scaling database technologies, thinking about rolling out this technology to potentially hundreds of millions, if not billions of people, that some of these UX concerns will go away, some of these mechanics concerns will go away, and that people will be able to interact with things. I remember, although I was quite young when the internet came about, and people had to learn how to search, and they had to learn how to email, and they had to learn how to do these basic mechanics. And my sense is we haven't yet learned that collectively, and that will take some time. But once that happens, people will begin to adopt this. And like we saw with the web in Web 2.0, we'll start to see more participatory activity occurring after that. And case in point, if you think about probably one of the most successful Web 2 projects, Wikipedia, it hasn't run into the same issues that we've seen with other forms of media, right? It doesn't have the same fake news related issues. It's completely community governed and controlled. Maybe that's a more resilient, better system. Now let's apply that to money. Maybe that's a better, more resilient system.
Wiki's got some serious trolling issues, but
they do, but they do manage them, Rick, right?
Yeah,
they manage them pretty well.
Absolutely do.
and media outlets get
Don't
trolled
you think,
too.
Aaron, there's a danger that people are applying a kind of naive utopianism to blockchain? Remember, most people that talk about blockchain are not Sandra. Sandra, knows what the blockchain is, but most people are not. And so they talk about the blockchain with this kind of strange, magical, quasi-religious kind of thing. And it's the same as when the internet was in its early stages, and the utopianism, we've just been through a generational slide from the internet's going to connect everybody and bring world peace into basically there are 5 companies that control the whole thing and we're all their serfs. And I don't understand why we would be more optimistic.
Well, because
if Facebook's going to run the blockchain, I mean, so what?
Well, I'm not suggesting that Facebook may well not win that war, right? But I think Jared Lanier had a great point about the internet technology and how it leads to digital serfdom. I think we're seeing it play out now. But I think here, this is why things are a bit different. Where the technologists want to go is really not having 5 companies control it. They want the technology to be open source, freely available, and they want a group of people that are their users to help them steer the ship, not a group of experts. I think taking a step up, it's not surprising that the mostly young people who are building this technology are a little bit concerned about the expert-driven approaches that have led us into the many quagmires that we're digging out of right now. And I think that there is some wisdom to that. And sure, there's plenty of opportunity to be critical. And sure, some people are probably a little bit more bullish than it needs to be. But I do think that there's some really interesting things that are emerging here that do point to where the future is going. And it may not be this exact future, but I think that this is directionally where things are going.
Yeah. David, the evangelism that you talk about surely does exist. And I can say from being in the space literally since 2011, that it opened up a conversation about what I mentioned earlier about value and values and how those are translated and interoperate together, both on a human scale and an economic scale. So that's why people get very excited. And since we now have basically almost a tabula rasa with social problems and health problems and economic problems, the time is now to rebuild and recast our value system globally bake them into these kinds of enterprises, these kinds of value tokens and value.
But come on, Rick, if you look at the origins of blockchain in this kind of almost teenage angry white male West Coast pseudo-libertarianism, the whole point of constructing it was to avoid any form of community or government control. I mean, that's what it's for. Yeah. It's not to drive inclusion or democratization or whatever. No. It's so that mom can't stop me from buying a PlayStation, basically.
You have nailed it. Bitcoin especially is libertarian in nature. So is Ethereum, by the way. And these are people who were actually anti-government in many ways. And this is a whole different conversation that we can have about that. I do want to ask you something, though. If Brett is American, then he has the strangest Brooklyn accent that I've ever heard.
Yeah, I'm not American. I did make that point clear. I come from much further south. Yeah.
But I don't know how much time we have left here. How much do we know? Anyway, let's keep on going until they kick us off.
Hi, Rick. Can I just add a couple points related? I love this debate, by the way, because I think what we're seeing is the epic battle around what is value and what does that look like. And let's face it, it's about power and control. But I think it's no longer just sitting in the domain of geopolitics. It's no longer about sovereign control of one big nation versus another. A social network that has 2.3 billion people, bigger than any other country out there, has the ability to potentially influence markets and what is value and money. We are on that road, and I think it will remain to be seen what prevails. But this renaissance of what is money, I think it's really important because having gone through the financial meltdown in 08 and 09, I was a banker at the time in London. It was very scary. And for me, I think I still have PTSD from the experience. To think that your institutions that are supposed to be sound and right are actually so wrong and absolutely, potentially a house of cards is actually quite an awakening. And what we're seeing again, 10 plus years later, is a lot of the social and socioeconomic and other problems that we have now coming to the fore, very much so because of the pandemic, which allows us, as Rick said, the opportunity to rethink and push back on the way we've been doing things. I think it's a good thing.
Mm-hmm. Yeah, and that brings me to ask you the question. Do central bank digital currencies change anything if they're fiat by definition? What are they actually changing except creating more individual oversight and less personal sovereignty? Somebody tell me I'm wrong.
Yeah, but that depends on design choices that society makes.
Yes,
so you should. I mean, I wrote a piece for Forbes today making this point. You shouldn't be asking people like me. You shouldn't be asking technologists.
That's the second time
it should be for the technologists to implement the digital currency that society wants. It should be society that decides whether the currency should be anonymous or not anonymous. It should be society that decides what are the rules about how this currency should operate and who should use it. It should be the technologists building what society wants, not technologists giving society a limited menu.
But David, that's counter to your previous argument where you actually postulated that people know exactly what they want.
I didn't say the people. No. I believe in a representative democracy. I don't believe letting the people have a say in things is insane. There's no end of trouble. It's like, so when I say society, I don't mean the guy drinking the hand sanitizer. I say, I can distinguish these two things in my. Look, don't get me wrong. I'm not being. I believe in democracy. I'm just not sure that everyone should be voting. That's all I'm saying.
Fair enough.
Voting.
Brett, you haven't spoken for a minute.
I was just going to say, I think, look, if you look at China and the CBBC coming out of China, that's part of their overall plan to weaken the US dollar. So I think it's by design. But I think more broadly, I'll sort of go full futurist on you here. I think we've got a basic problem with capitalism, in that capitalism is, COVID has identified that capitalism has no social conscience. And so if we can create alternative currency mechanism, alternative value exchange mechanisms tied to different utility than is just making profit for corporations, I think that'd be a wonderful thing. How do we create digital currencies, for example, that put more energy back into the system than it takes out, or that is climate aware, or that rewards organizations for buying goods that are built by humans instead of by algorithms, as an example. We need some alternative value exchange mechanisms that fight against, Dave's point, the top 5 companies on the US stock exchange have dominated their growth, since 2008. And yet they're not big employers, compared with the blue chips and the traditional industrials of the past. And so, we've got this emerging system that increasingly is unequal. Mm-hmm. And disparate. And so I think these alternative currencies could create sort of a social consciousness and be tied to a better utility than just making profit for shareholders, or keeping the US dollar strong. And I think that's where you're going to see ecosystems that have a sort of moral element to them.
I think that already exists. If you look, for example, at CELO token and the social impact missions around that, if you look at all the different...
The Sun Exchange, token with their RAR. Yeah, I agree. There are examples, yeah.
So that's already happening. But I think, back to your overall point, there's a sliding scale of decentralization. And there are intergenerational conflicts here that your debate is pointing out. And a lot of these tokens are, controlled behind the scenes by venture capital or other. So it's not 100% of, everybody voting as you fear. So I think it's important to realize that we have a crisis of trust, as you all pointed out, and that's why these new experimented models are happening, and it's a good thing.
It is a good thing. Let me make a distinction between venture capital backed digital asset is going to have in its DNA venture capital values. And we're talking about scale primarily, and the ability to move it quickly and seamlessly and frictionlessly, right? So that's one thing. The community-based tokens are another thing. They have a different set of values. It goes back to the Sharia law digital currency that we had popular years ago, right? So it's, that's, we're not going to solve this problem in one sitting. I think that all of you have had some amazing input. I want to thank you. We're going to wind up a little bit, but I want to finish up with one question that's mostly tech related, and some can maybe answer it better than others, but I'd like everyone to chime in because we all have to think about this. So we hear about quantum computing. Quantum computing's coming. Two things existing in one place. Holy crap, what's going to happen? Matter, antimatter, we're all going to blow up. But quantum is really brute force computing on a major level. And a lot of people think that blockchains in their current form don't even matter, because once you try to break a blockchain with a quantum computer, you basically can do it in a matter of seconds. Now, people have addressed this with the concept of quantum blockchains. The University of Cincinnati and some other people have trying to make this a reality as well. What's everybody's take on this? I mean, are blockchains even going to be a thing in 5 years?
Polymorphic encryption, on the quantum realm,
Homomorphic or polymorphic?
Yeah. We could essentially just, all we do is we use quantum in the cloud to create the security layer. That's the solution to that problem. But Dave?
Look, I think when we have our artificially intelligent quantum blockchain in the cloud, the actual problem itself isn't going to change. So a blockchain is a mechanism for establishing consensus in the presence of untrusted third parties. It doesn't matter what you can move to quantum resistant cryptography. NIST has, I can't remember off the top of my head, there are 25 algorithms being evaluated at the moment. That in itself isn't a problem. What's fun about it though, and I think this actually is fun, is about a third of all the Bitcoins in the world are currently lost, right? Because the dog ate the USB stick, or people forgot the password, or do what I did, which is like get rid of the old phone and forget to log into the wallet. So a third of all those missing Bitcoins, they're like a treasure in a sunken galleon, right? There's like at the bottom of the sea, there's a sunken galleon full of Bitcoins. And if we can build a submarine to get down there, we can get, and that's what the quantum computer is. The quantum computer will let us get some of the Bitcoins that are currently lost. And I reckon, so back of the envelope calculation, there's about $15 billion in Bitcoin in that sunken galleon. So if we can spend $14 billion on building a quantum computer, we can go down and we can make $1 billion profit. Who's in? Who's gonna? 14 billion, it's nothing nowadays. Apple's worth $2 trillion. $14 billion, we can go and steal all the Bitcoins. What'd you say? Who's in?
I'm in.
The dynamic price. Yeah, it's priceless.
I want the VC to get behind us.
51% quantum attack, yeah.
Okay.
But to David's point, and Rick, I'm going to just give my 2 cents on the whole quantum debate. I mean, it comes up from time to time. I hear you, but any technology is used for good or for bad. And frankly, if quantum's used, as David said, to go find the missing Bitcoin, that could be a very good thing for a group of people or for society, depending on what the founders do with it. But if people use it to just go and break everything that's out there, encryption-wise, then yeah, it's a nightmare. So what kind of guardrails can we put around it? Well, who are the people who are building it, and what are the kind of, governance or guidelines that are being meted out? I don't know. That's my question. Is there anything preemptive we can do while people are building? Because they were built.
Sandra's absolutely right. Bitcoin is the least interesting thing to do with a quantum computer. If you've got a quantum computer, then everything that's already been encrypted using public key is vulnerable.
No, that's
all those old pictures that you encrypted with PGP. Now we can see them all, Rick.
Do you have any investments in any quantum projects?
I don't have any investments in anything. I'm only a consultant. I can't.
No, I mean Nisa.
You need to talk to bankers like Brett.
But there already is quantum resistant cryptography that has been theorized and been implemented or is in the process of being implemented. And at least when it comes to Ethereum, to make it quantum proof, you just have to change the signature scheme. So it's not a significant change. And outside of the work at University of Cincinnati, there's other researchers, for example, at the University of Moscow, they also have developed, or claim to have developed a quantum resistant blockchain. So I think it is a big issue, and obviously another technology S-curve that's coming up, but I don't think that it necessarily will have ramifications, particularly for public blockchains. It seems like people are well aware of this and are pushing towards solutions.
Okay, well, Aaron, that was the last word, and thank you for that. Panelists, you've been amazing. You're all my new best friends. I'll be coming over for dinner with my mask on soon. And two of you who I do know, God bless. Everybody else, I'm glad to know you. Thanks, Leon. Thanks, Columbia Business School. And everyone have a perfect
Thanks, Leon. Thank you, Rick.
Take care.
Thank you.
Thanks, guys. That was really
Thanks,
fun.
everybody. Bye-bye.
Thank you.